Hi, my name is Rachel and I'm from the research team at iFAST. So today we'll be sharing with you on why we remain positive on the Singapore equity market despite its recent rally. For the 2017 Singapore market's performance, actually was 19% thus far, and the Singapore economy actually rose better than expected as well. Actually, if you were to compare what are the prices of all the constituents in the STI compared to where they were at the beginning of the year, you will realize that actually 24 out of 30 constituents in the STI are trading at valuations that are higher than before. Most of the price increases are actually from the real estate and banking sector companies. And let's not forget that the real estate and banking sector are actually the more heavily weighted sectors in the STI, and thus this led to quite a notable increase in the STI on a whole. So going forward over the coming quarters, we continue to remain positive on this market. One of the reasons is that firstly, we expect GDP to actually surprise to the upside. We think that GDP growth for 2018 could come in at about 3.5%. Reasons for this is that we continue to be quite positive on the semiconductor industry outlook. We should be relatively positive at large. And at the same time, we should also expect an increasingly broad-based growth over the coming quarters for the Singapore economy. So the next point that for our positivity in the market is actually also the banking earnings as well as the real estate earnings. And let's not forget that these are the more heavily weighted sectors in the STI. For the banking sector earnings, from the revenue side, due to the better than expected domestic economic growth as well as a continued pickup in the global economy, this will actually result in supported loan growth over the coming quarters. And at the same time, we should expect ourselves to be in a rising interest rate environment. Although interest rates are expected to rise gradually, but this should actually be more of a positive rather than a negative for the net interest margins of banks, which will also lead to positivity in their net interest income. On the expense side for banks, due to the better economic growth outlook, over the coming quarters, this should actually translate to better debt servicing capacities of companies given their better profitability. And this should actually be a positive for the non-performing loans of banks. Although we expect there to be continued uncertainties in the oil market, which will actually continue to present risk to the marine and offshore engineering sector in Singapore, we think that overall the outlook for the non-performing loans of banks is more towards the positive side rather than the negative side. So that should actually support the earnings of the banking sector over the coming quarters. Over to the real estate sector's earnings, we have actually seen quite an improvement in the private residential property market in Singapore. Over the last few months, we have seen quite a notable interest from the developers' side in the en bloc sales as well as in the GLS, which is government land sales. This actually suggests that developers are actually having an improved outlook on the private residential property market in Singapore. But at the same time, this also suggests that there could actually be an increase in the supply of units from this private residential property market. However, we think that this increase in supply should only come in 2021 and beyond. And we think that in 2018 and 2019, the supply could actually be lower than actually what we are seeing in 2017 right now. So if you look at the demand side of things, apart from the supply, we think that demand will continue to be supported over the coming quarters because due to the better domestic economic growth that we are expecting, and at the same time improvements in the domestic labour market. And also we don't expect the rising interest rates, which will be very gradual, to actually have a notable negative impact on the demand for mortgage loans. Taking this into consideration, we think that the outlook for the private residential property market in Singapore continues to look quite positive over the coming quarters. When it comes to the retail and the office property market in Singapore, we also actually are relatively positive on it, okay, and expect that there should be a continued improvement in the imbalance between the supply of properties and the demand for these properties. So overall, we think that the earnings of companies in the real estate sector should continue to be quite supported, if not better, than what we are seeing in 2017. So that's for the banking and the real estate earnings. If you were to look at the industrial sector, which is actually the next heavily weighted sector in the STI after the real estate, okay, there are actually some companies that are in the sector that are actually externally oriented, and we think that these companies should also be able to benefit from continued improvement in global growth. So taking all this into consideration, we believe that the earnings estimates for the Singapore equity market are currently conservative. We think that earnings for the Singapore companies could potentially grow 16% in 2018 and 9% in 2019. Okay, this compares quite favorably, okay, to if you were to compare to consensus estimates of 10% and 7% respectively. Okay, this would put the PE ratio for the Singapore equity market at 13.7 times for 2018 and 12.6 times for 2019 compared to its fair PE of 16 times. And so of course, given all this data, we actually expect that the STI could hit 4,400 points by the end of 2019. Investors that are interested to gain exposure into this equity market can actually consider the unit trust we have on our platform, Singapore Equity Unit Trust. Okay, if you are interested to have a more diversified exposure, you can consider Asia X Japan Unit Trust, which have an exposure to the Singapore equity market. Or if, on the flip side, if you are actually more interested to have a more focused exposure to the Singapore equity market, maybe you can consider investing in individual Singapore equity stocks. Okay, and we have actually a value and income focused list, which we have already picked up some of the companies that we are more positive on in the Singapore equity market. Thank you.